Hello, everyone. My name is Tone Vase of Liberty Life Trail, and welcome to my very first video blog. It's going to be about markets and technical analysis and trading. This isn't necessarily trading advice, but this is just one trader's view over the weekend on the markets and what I'm looking for going into next week. Of course, none of this is trading advice, but that's just a typical disclaimer. So the futures have just opened. Today is Sunday, October 9th, and we have the second presidential debate coming up in a few hours. As you can see, the futures are already green, and that's mostly because Trump had a little bit of bad press very, very recently about some of the things that he said over 10 years ago about women. So it looks like the street really likes Hillary winning. That makes perfect sense because Wall Street has contributed a lot of money to Hillary and none of the money to Trump. We can talk about that on a different show, but let's just jump and take a look at the markets. I'm going to do these videos in real time, also with basic tools, free tools, so that anybody watching that is new to this can easily go ahead and take a look at it. I'm not going to pull up my own personal trading account just yet, but we will get to that in future videos. So here's the S&P 500, and I'm just going to draw it right on the chart. So what you can see is we're clearly right at the 50-day moving average right here. And the market had a tough time crossing it over the last week, and this is a bit of a bearish sign. But we're also in a holding pattern because of the elections. Another thing that you can see on this is, let's see if we can get a yellow color here. We're working on a triangle. So we're working on a symmetric triangle, and we're probably going to keep working into this area because of the uncertainty with the markets, with the uncertainty with the election. The street will probably jump to the upside if Hillary is looking like she's going to win. And if Trump is looking like he's going to win, there might be a scare in the market. Think of what happened with Brexit when everyone thought that Britain was not going to vote to leave. So the pound went up in price when the votes came in, and the vote was yes, that they will leave. The pound immediately crashed, but then they realized that that was not the right. Well, the markets rebounded, the pound is still falling. And that is actually this situation right here. That's the same thing. Now, because we're under the 50-day moving average, it appears that the markets are overbought, but in reality, they're only a little overbought. There's no time to panic yet. So even if, let's see what we got here. So even if in the near future, we do this and pull back down to the 200-day moving average, that's perfectly fine. That just sets us up for another pullback, and then we can go back to the upside. The momentum indicators are really not telling us much. They're both flat at 50, so that's this and this. So they're not helpful at all at the moment. So we're basically just in a holding pattern, keeping an eye on the elections. So not much on the S&P 500. However, if you take a look at the Nasdaq, or the Nasdaq 100 to be specific, it looks like we are right near the all-time highs, which is a slightly different picture. Now, Apple had a lot to do with this because that's a huge component of the NDX, and Apple has been doing very, very well recently. So you have some resistance right up here at the all-time high. And a break above that resistance would be nice. It will set it up to go higher. However, the NDX is not going to run on its own. This isn't the dot-com days of 2000. So it is going to be in line with the rest of the market sooner or later. So again, not really much to look at. But now let's take a look at gold. Let's see what gold is doing. Okay, so here's the daily chart of gold, and this is interesting. Gold had a pretty big fall recently. One of the reasons why I wanted to start this blog is before this happened, and what I was going to point out, of course, hindsight's 2020, is this line right here. And I'm going to make this line nice and thick, and I'm going to make it thick for several reasons. Let's see if we can optimize it here a little bit. Oh, well, now there's two of them. Well, you kind of get the point. The reason why this line has to be thick is because it's numerous points of resistance and numerous points of support. And the nice round 1300 number, oh, let's get rid of that. And the nice round 1300 number is also right in that zone. Which is why I like to make my lines thick so that it's obvious when this line has been broken. The moment this line was broken, gold was just a straight up waterfall. But now look what we have. Of course, that doesn't matter since that already happened. What we have now, let's see if I can make this kind of darker here. There we go. This is a doji. The body is a little bit fat, but this is a classic textbook doji, and it's taking place right at the 200-day moving average. So there is a very good chance gold can rebound. A very good chance. See if I can draw the arrow here. That and that. There's a very good chance that gold can rebound. It's hard to say how high it's going to go. Gold is looking pretty weak right now, but it can definitely have a little bit of a rebound and then take it from there. Gold might have some more downside, but it's too early to tell right now. And we can already see in pre-market that gold is bouncing back up $8, which makes sense in the futures market. No, sorry, not pre-market. Gold is already available to trade if you know how to trade futures. If not, you would be trading the gold ETF, which is going to open at the usual time. But the combination of being oversold, which is another important aspect. As you can see on this daily chart, gold has not been in the oversold area of the RSI in a while. So it might have at least temporarily bottomed, if not more so. This is not showing any signs of reversals yet on the MACD. That still has well, we can still wait on that to reverse, but the RSI is in the oversold territory. So those that are willing to play some risk, they can probably look to play gold to the upside here. Other than that, we have been in an overall downtrend, which you can see here. Oops. There. Okay, and we have broken down. You can also look at this as a descending triangle. So one quick thing before we jump onto oil is we can also take a look at this chart from a weekly perspective. And on the weekly perspective, we have a slightly different picture. And the weekly chart has some downside. Right in here. So we have not hit the 50-day 50-week moving average yet, but we did it here and we did it here. And it's not ideal, but it went over it for like 2 days. But if you continue listening to my videos, you will see that it spent so much energy getting above the 50-day moving average that it just ran out of steam. So we know in recent history that the 50-week moving average has been significant, and it might be significant again here. So if you are more of a long-term trader, the weekly chart has some downside. We had the cross here, and we still have plenty of room on the RSI. So the weekly view is showing some downside in gold. So even if gold does go down a little bit, it is still looking like there is room for a bounce. Now this bounce could be short. It could be only up to the 200 week, and then it resumes its downside. That is totally possible, but we will talk about that scenario when we get there. But for now, keep an eye on the bounce in gold. Let's jump to oil. Oh, forgot. It's WIC. Force a habit. Always make that mistake. So if we look at the price of oil, this is the weekly chart. I guess since we have the weekly chart open, we can talk about the weekly chart. And the weekly chart looks interesting. The weekly chart is setting up for a continued bounce if we can break and hold above the 50. So this is very, very clear resistance in the $50 range. So if we can break above this resistance, oil is looking good. Now my long-term view of oil is pretty bearish. The world slowly removes itself from the need for oil. Also, this has we have plenty of room on the weekly RSI right there. So it is possible for oil to continue moving up, especially if the world is scared that there'll be more trouble in the Middle East and more wars, and OPEC gonna cut back on production. Not that OPEC is producing all that much oil these days, but so it is possible for it to run. And we can have another pullback. So right now, the round number of 50 is a wait and see. I am not trading oil at the moment, either to the upside or to the downside. If I do see a breakout, however, that might be a nice play to the upside, even though long-term oil doesn't look good. It looks like prices definitely want to go lower. On the daily chart of oil, which is what I wanted to get to, it looks like we are running its course. We had a nice big run up from the $40 range in August, and now we are back up again. So breaking new highs. If we take a look at the futures, which just opened, and we take a look at oil, it's down about 33 cents here on Sunday night. So the daily chart of oil, it's not technically overbought according to the RSI and the MACD. It's not technically overbought. There is still room to grow on the RSI, and the MACD has not turned, but this candle is a bit of a bearish candle, and also we got a little bit too high above the 50-day moving average. So I can very easily see a drop to test something in the mid-40 range and then potentially go back up. So oil is in wait and see mode. It can really go either way. It's a little overextended right now. So even if it does make a run up above the 50 and into the 60s, it might pull back a little first. Let's have a quick look at the US dollar. And this is the daily chart of the US dollar. And again, it looks like the US dollar put in a very clear doji style reversal candle, just like gold did on the bottom. So gold and the dollar are usually inversely related, and the dollar has not broken out yet. We have a high here around 97, but we are above its moving averages. But again, the moving averages on the dollar don't seem to be all that relevant. So again, we got a little bit overextended. We can clearly see that it had trouble breaking out of the 96 area. So we can easily pull back down to about 96 and then continue its upward trend. I am long-term bullish on the dollar. If we take a look at the weekly chart of the dollar, it's literally been going nowhere this entire year. We're pretty flat, down a little bit. We were also pretty flat last year, but with more volatility. But the real run-up was in 2014. And the 200-day moving average is just catching up. We are still way above. Let's see here. Green. We are still way above the 200 week moving average. So that might need to catch up. We also have plenty of room here, and we have not even broken out to the upside this entire year after we have fallen below it. So the dollar definitely has plenty of upside, even if it falls back down, which I don't expect. With all the trouble in Europe, the dollar will only get stronger. So I am expecting the dollar to break out, and probably not this year, but next year, I am expecting the dollar to challenge this 100 resistance. And if we break above 100, things might escalate. Should make this green. Things might escalate very, very quickly. But again, we'll get to that bridge. We'll cross that bridge when we get there. And finally, I don't want to make this too long. I just want to do a quick look at Bitcoin. Bitcoin is one of my hobbies, which I enjoy watching and participating in that community. And Bitcoin has been fairly stable most of the year. We had a run up in early summer that had to do with the halving of Bitcoin. Right now, we are stuck under the 625, 630 range, and being able to break out above 630 might do good things for Bitcoin. So I am keeping an eye on that. Okay, so we'll end it on that note. If you like this video, they will get better. This was my first attempt at a video blog. It is going to be technical analysis. I doubt I'll get into single name stocks. I will stick to the general indices, mostly technical, some fundamental. I am a trader. That is what I do for a living, and I'll talk more about that in upcoming videos. But this is a good way to start my video blog. Enjoy, subscribe, and welcome.